Badass business owners, welcome to another episode of the Local Small Business Coach Podcast, where each episode we work on getting you to $100,000 in take-home pay. So if you're all ready to boost your profits, increase your sales, improve your processes, and develop stronger teams so you can stop living job to job, then let's dive in. Hey, badass business owners, welcome back to the show. It is Thursday, which means we are going to dive in again into our numbers and understanding them better. That's what we've dedicated Thursdays to. So let's do it. The last few weeks, we've been on a theme that has to do with our profit and loss statement. Yours might be called an income statement, where I'm trying to break down each section a little bit just so that you kind of know what you should be looking for and understanding it a little bit better. So we've already talked about the P&L in general. Last week, we talked about the income side of it and how I think that you need to have that broken down into some categories so you could kind of see where your sales are actually coming from. Well, the next part of your profit and loss statement is your cost of goods sold, often referred to as your Cogs. And this is where you're going to basically take the costs of the parts, if you will, that help you put together your product or service. Now, the first thing you have to understand is there's a difference between expenses and cost of goods sold. So, for example, anything that has to do with overhead is not included. So your utilities, your marketing, shipping, anything that goes into the actual ability to you to run the business outside of making that product or service is not included. Now, sometimes people will ask about the electricity. Well, obviously, I can't do the electricity. I can't put my product or service together if I don't have electricity. It's still under utilities, okay? Don't make it more complicated than it needs to be. So keep utilities under expenses, even though it is used in the actual process of making some things. Now, what is included? That's the important part, right? So these are going to be the things that have to do with putting it together. Now, I've used this as an example in the past. Let's do some of the most basic. When it comes to a product, it's easier to understand what goes into that. So let's just say you make bicycles. You're going to have the parts. You sell bicycles. So you're going to have the cost of that bicycle. So maybe you might get the bicycle already made, in which case it's just the cost of that bicycle for you, to be shipped to you. However, if you have other stuff that are involved, then it might be more to it. We're going to come back to the bicycle one in a minute. So let's put that one aside. Let's go back to my ice cream shop. My ice cream shop, I had the ice cream went into it, right? I had the cups, I had the cones, I had the packaging, I had the spoons, I had the napkins. I had everything that went into me being able to provide that product to the customer. So the most purest, simplest is if you're a retail store and you buy it from one place and you turn around and give it back out the exact same way, in which case, it's just going to be the cost of you to be able to get that. Now, if you're a service-based business owner, let's just say you're a handyman and you're going to install a water heater, then you're going to have the cost of the water heater and any of the parts which might go along with you installing that water heater. So if you have to put new supply lines on, a new valve, whatever the case may be, those are parts of the cost of goods for you to be able to buy all the parts for you to be able to do it. So you've got two parts that are tied to it, right? You've got the actual parts and then you have the labor. We're going to come back and talk about labor because labor gets a little tricky. So we're going to hit labor up in a minute. So when it comes to payroll and labor, just set that aside for 1 second. So basically your costs of goods are going to be anything that is used. Now, I also highly recommend that you break these down into categories. So for example, when I had my ice cream shop, I had it down. Ice cream was a category. The other goods, like the paper goods, were their own category. Toppings that went on them was its own category. So I broke it down. The reason I personally like it broken down is for a couple things. One is when you go to look on how to create more profits, you can track your categories and how much money you're spending in each of those categories. Also, you're able to tell from a percentage standpoint how much of your costs are tied up into that particular category. So you definitely want to break it down. You don't want just a lump number, because part of our goal is not just to create more sales, our goal is to create more profits. So the more things are broken down, the better, the more we can dive in and try to come up with those profits. Now, I'm not saying go crazy and create a category for every individual type of item. You want to have anywhere between 3 and 5 categories, depending upon your business. It might just be 2, but you might want to create different categories. So this way, when you go to dive in later, you can really see where that money's coming from. I think you're going to find that the better you get at your numbers, the more you'll see that this is important and it helps you out. By the way, almost all programs can start breaking that down for you. It's just how you set it up. If you have a bookkeeper or somebody who does your accounting for you, they also can break that down for you if they're not already. So I highly recommend that you do that. Now let's talk about retail. Let's talk about payroll for a moment, because people always wonder, is payroll an expense or is payroll included in your cost of goods sold? Well, that depends. Okay, here's the thing. If the payroll is used directly to make or produce the product, it is considered a cost of goods. So the only way is if they're involved, for example, the official way is if it's involved in the creation of the product sold. Let's go back to that bicycle. Okay, if I sell bicycles and I get the bicycle already made and already put together, then guess what? Then that bicycle does not have any employee expenses to it. Yes, there's an employee that sells it, but that's just overhead. I need to have employees to be able to sell it, so that payroll goes under expenses. However, if I get the bicycle in parts and I have to have somebody put the parts together in order for me to sell the bicycle, then that is payroll that is needed in order for me to sell the bicycle. So they have to they're part of the creation of that bicycle. So in which case, the payroll for the bicycle would be included as part of that cost of goods sold, because I'm getting all the individual parts, then this employee is putting them together. Now, the payroll that's tied to selling the bicycle, that's something completely different. So it's direct and indirect. I'm hoping that makes sense. I know it can get really confusing to people, in which case sometimes a bookkeeper or somebody can help you out, or an accountant or something can kind of help you out. So if you give your taxes over to somebody, what you can do is you can ask them to help you look at your payroll. Now, do you have to get super anal? For example, you have one employee and that employee puts the bicycles together and sells the bicycles. Do you have to split up their payroll into one category and to the other for the times that they spend on this versus that? You can get with the accountant to let you know that. I mean, you don't, but you do have to be able to prove that it is part of that to put the thing together. So, you can weigh it all out. If you want to break it down so that way you know how much time is spent, if 50% of their time is putting bicycles together, then put 50% of the labor in there and the other 50% into the other one. How anal you want to get on it is up to you, but just know that payroll is not part of your cost of goods sold if they're not involved directly in the labor. So go back to our water heater example. That water heater has to be installed. So in order for you to complete that service, it is direct payroll because they're directly involved in installing that water heater. The person who took the order, the person who answered the phone, the person that set up the deal and all that, that's indirect. So that payroll is not included in the cost of goods, but the person who actually installed the water heater is part of the cost of goods sold. Hopefully I'm not making this even more complicated and that you kind of follow along when it comes to payroll. It can be kind of confusing at times because we do have employees that wear multiple hats at times, but the main thing is to keep in mind that if it's involved directly with the creation of that product or service, it is a COG, it is a cost of goods sold. If it's indirectly supporting the sale of that product or service, it is not. It is under your expenses. I'm sure we'll touch on this again when we get to expenses, but the main thing right now is when it comes to cost of goods sold. Now, there is one other thing when it comes to your cost of goods sold, and that has to do with, because when it comes to inventory is flowing in and inventory is flowing out. You always start the month with a certain amount of inventory that you already had. So you're going to have your beginning inventory costs minus or plus anything new that came in, minus anything that went out. So your total cost of goods sold by the end of the month or by the end of the year is going to be that difference. So if you had $100, you added $20, but you sold $30 worth it, at the end of the month, your cost of goods sold obviously would change based off of that. But the main thing that you're going to focus on, and that part's where it really gets confusing to folks, but that's just more of how much you have on hand of what's left. So, but the main thing for you to try to remember is what it is that you had coming in and what you had going out. Now, I do want to backtrack for one quick second on what I kind of said. Sometimes you have, because usually what's happening is when you are purchasing the stuff is when you're counting it. So a lot of times, just because you sold something this month, but you already had the cost of goods in the building, that doesn't mean you get to count it twice, because most people, you're putting your cost of goods in at the time that you purchase it. And that's where if I confused you at all on that last piece about what you started with plus what you added minus what you took out is your final cost of goods sold, just know that if you're capturing them, like for example, let's just say this month you get the bill and you get in the items, but you're not going to sell them till the following month, it's still counted in this particular month, even though you may not sell that till next month. So sometimes that can get confusing. So it's not necessarily the way most of you are doing your typical accounting is the fact that you're paying the bill when you get the bill, in which case that's when you're going to count it and you're going to add it in. So is it possible? So let's just say, let's see, I'm trying to always think. The reason that I pause sometimes is because I'm trying to think of the best way to explain it to you without it being, visual at the same time. Is let's just say you have flat across the board where let's just say you sell something for $100 and it costs you $80. So you would think that on a nice clean P&L that if you bought it at the same time you sold it, it would say $100 worth of sales and $80 worth of cost of goods sold. But let's just say that you got a special and you pre-bought a bunch of stuff. So even though you sold, let's just say you sell 5 of them, which would be $500, but you bought 10 of them, your cost of goods sold wouldn't be the 80 times the 5 you sold. It would be the 80 times the 10 that you actually purchased. So there are times that your cost of goods sold could exceed what your sales are based off of when you purchased it. Or it could be the opposite. Let's just say you sold 5 of them, but you already had 5 sitting in your inventory. Your cost of goods sold for that month might be 0 because you didn't purchase anything. Does that make sense? So your cost of goods sold doesn't necessarily always align with the time that you sell it. It depends on when it flows in and out of your business. So ideally, if you bought it at the same time you used it, yes, they would match up. But there are times when it might be higher than normal or lower than normal based off of when the billing and when you ordered it came in. So hopefully that makes sense out of that last part, because I know it was kind of a little bit confusing and I realized I needed to help clean that up a little bit. But your cost of goods are going to flow based off of when you order them. And sometimes we don't order exactly what we need at the time. We might order a month or two's worth to get the discount, in which case our cost of goods might flow a little bit based off of what we started with, plus what we added, minus what we sold, kind of a thing to get that total cost of goods sold. So I just wanted to clean that up a little bit to make it a little bit easier to understand. So basically, once again, just to kind of wrap this one up, so as we're diving in here to our P&L, you understand the sales side a little bit better. Hopefully you understand here the cost of goods sold. You might have to listen to this one twice if this is still confusing to you. But just remember, your cost of goods sold are everything that it took for you to be able to produce that product or service. So any products or pieces that went along to putting it together, or what it cost you to purchase that, Plus, when it comes to labor, don't forget that the only part of the labor that is included is the labor that was involved directly in producing that product or service, not the sales side of it, but the actual producing of it to be able to give there. So hopefully that is making sense, clears that up a little bit. Make sure you do break that down. So for example, it could be, plumbing parts. If you're doing water heaters and all you install are water heaters, in which case you might say, hey, I want to track how much money I spend on just the water heaters and then how much I spend on the parts and then what I spend on the payroll for that particular thing. So that way you could probably break that one down. For example, is it a little overkill on that particular one? Yes or no, because you might find that when you add up all of the parts that you could be purchasing them better, or you can really see how much you spent on water heaters. And is there a way for you to be able to control that a little bit better? Each of these is a little different with your particular business, but you might find that you break it down and you're able to see things that you didn't see before when everything was lumped together, which is why I'm a big fan of breaking them out into categories, because I just think it helps you see the opportunities much better to be able to control and increase your profits. So I'm a big fan of that piece. All right, I'm going to go ahead and wrap this one up. I'm going to do a video on this one. I haven't done it yet, but I will be getting to it. As you guys know, I was trying to produce some of these videos, and then it got crazy busy, but I wanted to make sure that I continue to talk about the numbers, and I will be coming back and creating the videos that go along with this. Plus, I'm going to do a deeper dive in the course that I plan to put together on Know Your Business Numbers, which is also going to I'm going to be working on that so that I can get that together for you. If you're listening to this in the future, if you go to knowyourbusinessnumberscourse.com, you can go right to it. If you want to get on the waiting list to know when that comes out, you can also go to the knowyourbusinessnumberscourse.com and you can sign up there at the same time. But I'm going to try to continue to work on videos for the for the YouTube channel, and then deeper dives into that course that I want to put together for everybody to help you out. But with that, I'm going to go ahead and wrap this puppy up. And next week, we'll dive in a little bit more into the expense side of it and just keep looking at knowing those numbers and understanding them a little bit better. Because I really, really, really want and encourage you to become pros at reading your profit and loss statement, your income statement, whatever they call that for you. It really is the foundation of your business and understanding where your money's going, because sometimes you guys just work so dang hard and you don't know where your money's going, and your P&L, honest to God, is telling you where your money's going. It's telling you where your opportunities are. It's telling you where you can find some profits, and you don't have to keep trying to work harder and harder to make more money. A lot of times the answers and a lot of money is sitting right there in your P&L trying to tell you where that money is at. So we're going to keep talking about how do we get you to earn more money? How can I help you earn more money without necessarily having to double your sales to get there? There's a lot of pieces to your numbers that if you just knew them, you wouldn't have to work harder and try to out earn your stupidity, as sometimes we call and joke around about it, is that we think that if we need more money, we just need to work harder. And the reality is we just need to work smarter, and we need to understand our business a little bit better. And that's what we are trying to do on these Thursday topics. All right, with that, I'm going to wrap it up, and I will see you next week on the next episode. Bye for now. Hey, badass business owner, if you're interested in taking your knowledge to the next level on understanding the numbers of your business, then head on over to knowyourbusinessnumberscourse.com and sign up to be one of the first to get any new items I put together to help you take your skills to the next level. Not only will you get immediate access to any new videos I create, but you'll also get copied on any tools I create to help you get better at understanding your business numbers. Plus, get any updates on the upcoming course, Know Your Business Numbers, where I will be taking a much deeper dive into the numbers that will help you become the badass business owner I know you are. So once again, if you want to keep building the skill, building this business muscle, check out the link in the show notes and head on over to knowyourbusinessnumberscourse.com and sign up now. Don't you think it's time to use your business numbers to earn more profits?